Hi everyone, I've got Dave from Home Loan Solutions. Today he come down to my office with a few other mortgage brokers and we discussed the Royal Commission findings in the mortgage brokerage industry, and it was quite fascinating to hear 4 or 5 different mortgage brokers of what they said today. Dave, welcome.
Thank you, thanks for having me. Thanks for your time today.
No problem, thanks for coming down. Now, we all know what the Commission has come out with a few recommendations. One of them is hitting your industry. Could you please elaborate a bit? How is it going to affect your industry from what the recommendations have come down with?
Okay, initially when I heard those recommendations, my initial thought was very strange, because obviously Commissioner Haynes, all due respect, doesn't understand our industry. Okay, and the bulk of it's around commissions. His recommendations were that the client should pay commission. So if I give an example where a client would pay a fee to a broker, it's going to kill the industry. And what it will really do though is kill competition for clients and for customers, for the consumer. And the reason being is that these other players, not the majors, will, without a shadow of a doubt, pick up less business, and all that will do is drive consumers to the major banks. And that can't be good for consumers at all, in any way, shape or form.
Because at the moment, your industry provides about 60%.
Yep, six out of 10 home loans. 6
out of 10 home loans are written by mortgage brokers.
Brokers across Australia, yeah. And look, and even take that a step further, there's a 96% satisfaction rate of consumers, borrowers with brokers. Yeah. So the industry's not broken. There's nothing really to fix there. I mean, that's a very high satisfaction rate for any industry.
Yeah, and when we're talking about trailing commissions, we're not talking about hundreds of thousands of dollars, are we? You know, per month, or you know,
no,
what's the percentage of a trailing commission? What do you actually get as a trailing commission?
It's approximately about 0.15 of a loan. So a $100,000 loan is about $150 a year.
Mm. Now, a year, not a month.
A year. Yeah. So there's a misconception there that through Commissioner Haynes that the consumer would pay more going through a broker. Well, there's actual figures out that that's the opposite. It's the opposite effect, because if we think about the commission model currently, we get paid an upfront for our knowledge, for our convenience, for assisting the client, for putting an application together, for getting them a good deal at the end of the day through competition. So let's be very clear on that.
And your job doesn't finish there. You know, as a client, you continue looking at his interest rate as it's going along and to get him a better deal.
Absolutely. So just give an example. That's the first way we get paid. The second pay we get paid trail. Before I came to your office today, one of our existing clients, we fixed their home loan. So that's what the trail pays for that ongoing service. Yeah. Now, let's be real clear on this. It's the consumer that wins here by us getting paid trail. Yeah, okay, I'm a business owner and it's great, but it's not money for nothing, and that's a misconception that it's money for nothing. We get paid that to look after the client. If that trail was to go, economically for some brokers it wouldn't be viable. Support staff might have to go, and the consumer is ultimately going to lose here. That's the big issue. The consumer will lose because the broker won't be able to assist the client to the same level of expertise, effectiveness of turning around very quickly. So the client's going to be pushed towards the major banks. Ring a 1-800 number and have a good time with that. It's not going to happen.
Yeah, and today I was quite, myself, I thought that trailing commission was paid by the consumer or the person who borrowed the money, but it's actually, in fact, you're paid by the bank, correct?
Exactly. So Peter, if I can explain it this way, you take out a home loan with an institution, $350,000 home loan, you take 20 odd years to pay that back, you're probably going to pay about another $250,000
on interest.
In interest. So we get a very, very minute percentage of that to look after the client. Yeah,
and that's paid by the financial institution,
by
and not
the bank.
Not
the
the
consumer
client.
does not pay. Okay. So if it's a consumer-based model, the consumer's actually the one going to lose.
Yeah. Look, I know myself. I use a broker, and for me it's convenient. He comes after hours to my house. I've developed a very good, strong relationship with him. He looks after my interests. You know, he looks after the best product for me, and you know, we need the industry to survive. We need the industry to be out there, because if we don't, we have to put up with the banks again.
Absolutely.
And we know what the banks have been doing in the past since 2008, and what's come out of this Royal Commission with the banks.
Absolutely.
So what would you like to see happen?
I'd like to see brokers write 90% of loans out there, because I know that the result is better for the consumer. Absolutely. I don't want to see commissions changed in any way, shape or form. I think the consumer wins with the current model. The consumer's not losing. I think we need to look at the banks perhaps a little bit and their culture internally on having to reach targets and things like that. It's all shareholder driven at the end of the day.
Yeah.
I think that's where the focus really needs to be. The consumer is, whether you're in your field or my field, it's the general punter, the general Joe Blow out there that needs to win out of all of this.
Yeah.
And it's not broken. The model is not broken. 96% satisfaction rate. Proof's in the pudding.
Yeah. And Dave, if they got rid of you guys, there's only going to be one person who's going to be benefiting from that, and that's the banks, correct?
The major banks, because it will drive competition to them. Because you can imagine institutions out there that we can put clients with today and don't have a branch. The general punter out there, the general Joe Blow, will turn around and say, look, I might just go to my local branch because it's convenient.
Yep.
I know it's not necessarily the best thing for me.
Yep.
And the major banks will just pick up more business. And all due respect to the major banks, they're to serve a purpose, but we need competition for the consumer.
Dave, thank you very much for coming down today and sharing your thoughts with the community.
Thank you, sir, for making time.
No problem. Thank you.
You.